Canada's main deadline to file taxes has already passed. But today marks tax day in the US, and one thing this time of year always brings is stress and anxiety about dealing with finances. And it doesn't help that both Americans and Canadians are living in a consumer society where we're surrounded by advertising and marketing ploys, hyping up the latest thing and convincing folks to spend their hard earned paychecks when that money could perhaps be put to better use. Joining us now is Rick Wood, Vice President of Client and Advisor Success at Caldwell Securities Limited. Rick, welcome back to Farm Daily.
Thank you, Julie. Great to be back.
The media, marketing, and advertising plays a big role in creating a frenzy for the newest and latest products and services. Do you see the same thing in financial services?
Absolutely. Products are created to be sold, and it's no different in our world than any world around you. So anything that is hyped up or, the product du jour or things that are happening, things like the Magnificent Seven or the FANG stocks and that, there's going to be a product that's manufactured for it to capture people's attention and more importantly, to capture their money. I guess as an advisor, it's also a double-edged sword because people get excited about buying things, but it doesn't necessarily mean that the product they're buying is right for them. So we've heard of buying for needs or wants, and a lot of people end up buying for something they want, but not necessarily what they need. And we really try to keep people to understand what they should be buying as opposed to, well, this is what is being marketed. I'm very excited about it. A lot of times in our industry, we sell people things that they want as opposed to they need. And again, it makes the job of an advisor a lot harder to try to keep them on track to say, what you should be buying is, something that's a diversified for your portfolio with a recommendation as opposed to, the Magnificent Seven. And, Magnificent Seven, it's a great song by The Clash. Maybe, now isn't the time to buy it for your portfolio.
So, given the consumer society we live in and the fact that so many people's self-worth and status is connected directly to the acquisition of owning goods products, do you see a similarity as an advisor in the investment world with your clients?
Absolutely. I love when I'm out at a social event and that, and not everyone really knows what I'm doing, and I'm meeting new people, and you start to hear people talking about, the investments that they made and what they hold, and everybody's always talking about their winners. They're never going to be talking about things that lost money, but it creates that hype and other people, that FOMO of wanting to own what, people are talking about, whether it's, the Teslas, the NASDAQ or anything, Bitcoin or any of those sort of things. And really what it does is it leads to people again starting to chase for returns, because generally when somebody's talking about something in that time, it's usually something that is really high. The market has already captured a lot of the value in it, but that's the ones that they're talking about, and other people will go out towards buying it. And the crazy thing in our world of investments is we love to buy things when they're at the 52-week high or when they're really overpriced. And I give it my ice cream theory. So if you were buying ice cream and you had your favorite ice cream and it was a premium ice cream, but it would cost you $5 for a little thing of ice cream, you might, indulge once a month to pay for that ice cream. If you see the ice cream go on sale and it's 2 for $5, then you're going to buy more. But in the markets as an investor, we don't want to buy anything that is dropped half price. That would be the last thing that we want to do. We want to buy the ice cream, when it's $25 and that. So there is a disconnect, and I don't necessarily understand it. Warren Buffett says best, be fearful when others are greedy and greedy when others are fearful. But it is very hard to try to get clients and investors to look at things where if we value it and there is good value, we want to buy it when it's on sale, not when it's at a premium.
And some folks believe that consumerism can lead to a materialistic society that neglects values when people begin to define and judge others by what they own. Do you feel that consumerism is a bad thing in our society? We have 30 seconds.
Well, absolutely not. I would not be here saying that, consumerism really is a product of a capitalist society. And, what it does is it allows for amazing entrepreneurs to create things and to dream big and give us things that we've never had before. So, the greatest thing about capitalism is it solves problems in a world that we live in and creates things that make our lives a lot easier. Now, obviously, we have to temper that. We can't, at the expense of the environment or psychology or things like that, do those sort of things. But again, when we create these great thinkers, these great entrepreneurs, they're also going to be the people that are going to help us solve the problems of climate change, and better things, for our world and for our self-being. So no, I'm absolutely believe that consumerism and capitalism go together. Obviously, things can go too far one way or the other, but really it's what moves the world and what advances us and gives us a better life.
Thank you so much for your time.
Thank you. My pleasure.